correction ahead, or is this market going to make it 7 weeks in a row on the upside? That's the question on everyone's minds. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market report for Monday, the 20th of August. You know, the U.S. equity markets have closed 6 weeks in a row higher. While this is not an impossible feat, it is rather unusual to see a market move 6 weeks in a row without seeing any sort of correction. We think we can pinpoint one of the reasons why this is happening. The markets have moved up on very light volume, and that's something to be very, very careful about. We still have all the problems we had before. Europe, the elections coming up in November, China slowing down. None of this is going to go away anytime soon. So is this week going to end up higher, or are we going to close lower for the week? We are skeptical that the market can stitch together 7 consecutive weeks of higher closings, given the proximity of the major resistance at the April highs. Now, let's take a look at the markets using our trade triangle technology. And what we're looking at today is more or less an in-depth look at the euro and where we are and how we've come about this whole thing. So here we are. We're looking at a chart going back to 2004. I've left our monthly trade triangles because they are particularly good, I think, with the major direction for the euro. Now, we also trade the weeklies, but that obviously is a lot more action. So let's just put the monthlies in so you can see some of the big moves we've captured in this market. So just very quickly, you can see here's a buy right here. Market goes up to here. This is a sell. Goes down to here. This is a buy. Here, and you had a little one sell here, but another buy here, so up to here, and then down to here. So as you can see, you pretty much capture most of the major moves, certainly since 2006, the last 6 years. If we just take this time window here, this was, obviously you caught some moves here, but not as much as you caught. The big moves really came in after 2006. But if you just pay attention, that's why we put so much emphasis on our monthly trade triangles. If you're a longer-term traders, or if you want to have money in various currencies, this is certainly, you would not have your money in this currency from 139.69, and it's not over with yet. We're currently trading at 123.41, a little blip today. There's really no direction coming out of Europe. The Europeans really don't know what they want to say, because Draghi was basically saying, oh, this is going to happen, this is not going to happen, and they just don't know what to do with these bond sales. What the number's going to be, it's just too confusing when you have that many different countries, political different leanings, and so forth, come together and agree on one thing. So anyway, I want to show you this with the euro and give you an idea that it certainly catches the big moves, and that's really what you try to do to make money in the commodity markets or in the currency markets or in the stock market, catching the big moves. So here we are. It's a plus 55. Indicates a sideways pattern like this. Really not too much going on, but certainly the battle lines are drawn in terms of the resistance and the support. Now let's clear the screen and go to a really close-up look at this, and you'll get an idea of what we're talking about. Let's just go the last sort of 6 months and get an idea. So click on the 6-month button right here, 6 months, boom, and you can see how we sort of come down. And we've just been, since we hit the lows there on the 24th of July at 121.31, 120.45 rather, we sort of just have moved sideways. Certainly the 124 area is resistance. You can see it's been battered down just below 124 here. So I think there are areas that you really want to probably pay close attention to, right here and right here. So I would say 124 to 124.50. That's definitely where I think we see the resistance in this market. So let's see how that plays out. And on the downside, you've certainly got the lows right here. And I think if we go through those lows, I think we'll see this market test the 120.40 area. And we're looking eventually for this market to go to the 120 to 117. So let's see how that plays out. Trend very definitely down on the monthly, sideways on the bigger trend, intermediate term trend up, daily down. So let's see how that plays out. Let's clear the screen and go to our next market. Go back to our portfolio here. Actually, we're going to be covering 3 different markets today, but let's jump into one of those right now. and it sort of emphasizes its first solar. It's up big today. It's a big percentage mover. It's up 8% for the day. And I want to show you why this is important. Now here you see a monthly trade trial. Again, these are incredibly powerful tools you have at your fingertips with MarketClub. So here on the 7th of August, 1948 was the buy. You can see right there. It's right up here as well. And you can see we're currently trading at 23, over 23. That's a 8.34% move today. So again, you've got $3.50 in this trade already, and that was just a few days ago. But what I want to show you more on this First Solar is, I'll just scope this out. It's come a long way. As I say, here's our sell signal rather, at 132.17 on the May 4th of 2011. Huge move down. That's why these markets really, you want to look at the trade triangles, especially with individual stocks. Very, very powerful. This is our first buy signal that we had on the 7th of August, and it's turned up. Nice trade today. So let's go back to our portfolio. Let's take a look at crude oil. We'll zip through some of these markets and see what's going on. And as we go to crude oil, let me get a little chart. Just click on the little blue button right here. And crude oil, and we'll scope this in just to what we normally see. So you can see crude oil is actually a little bit on the defensive today. The monthly is still down. You can see the monthly back here at 97.89, and it's sort of coming down a little bit today. But it has moved up, no question about it. One of the things we use, and I like to look at anyway myself, is the Donchian trade channels. And also, I also put the parabolics on. So you can see quite closely. And let's just do a 3-month chart. You can see quite closely how every time we've gone to these levels, it sort of popped back in. And I think this is going to be no different this time. The key level today is going to be this parabolic, which comes in at 94.31. It's probably not going to be hit today. I'm sorry, 94.31 is the PSR. And it's probably not going to be hit today, but certainly the momentum is beginning to lose momentum here. So it's very important from an overbought condition. We could see this market come back down. Plus, we've got a big volume day going already on this market today. So let's see how that plays out. And let's go to our next market. And we're going to be looking at the Dow. The Dow basically is, you can see, just right up against the top of the Donchian trade channel. The PSR comes in today at 13,145. Certainly about another 100 points lower than we are right now, so I'm not sure we're going to see that. But generally speaking, it looks to me as though we're up against some sort of the top of the a potential challenge. Now here, obviously, if we just look at this, you can see just drawing in the resistance lines, certainly here, I think, on the Dow. We're sort of right up against this resistance. I don't think we're going to go right through there. We may go sideways for a while, but certainly we've had this market go up, 6 weeks in a row. So the question is, are we going to see it go up 7 weeks? I am somehow skeptical. I think we'll see potentially a pullback, possibly to the midpoint of the Donchian trade channel, which would take it just below 13,000. So let's see how that plays out. And but your triangles are mixed. You've got the monthly still down here. The weekly is up, so you've got this sort of trading range where we're in right now. So I think that's how the market's going to trade out. So let's clear the screen and go back to our portfolio. Looking at spot gold. Spot gold traded over the 1,620 level. That's in fact, it's right there now. And you can see that, again, it's moving sideways. You got a plus 70. Again, you got a conflict between the monthly and the weekly. And you can see it's been, I think most traders would agree, certainly trend traders would agree, this has been a very hard way to make money. But what's happening is you're seeing this kind of broad channel. It's getting narrower. You can see this is getting narrower. And I think that's maybe the clue. We're beginning to tighten up and potentially getting ready to move up on the upside. We want to see, of course, the monthly trade triangle go up and turn green. I should get a green color for it. Just turn green. So let's see how that plays out. And let's go to our next market, and that's going to be, hold on. the NASDAQ. And of course, Apple is very strong today. We have to scope this in so to get a little closer so you can all see the chart. So we're going, let's go to 3 months. And you can see it just basically, it's really not coming down very much, but it is up on the day, down for the day. And you've just touched this sort of area on the overbought condition. So I would not be surprised at the fact that we're at the top of the downtrend trade channel to see this market come back down. So, because again, we've been up 6 weeks in a row. Can we make it 7? Not an impossibility, but I think it's the odds are getting longer and longer on this thing. So let's close that up. Go to copper. And copper is down today. It's down about 1%, 1.3%. And copper is an industrial metal. You can see it's not acting that well. I think we'll probably see this. It's still in this very, very broad trading range. I mean, if we go back even 6 months, you can see it's really not jumping out of this range, either one. So between 130 and 135, the market should find support. Let's see how it plays out. But generally speaking, you've got a mixed bag, minus 65, indicating a somewhat trading range in the near term, but our monthly and weekly are negative on this market, indicating a lower trend for this particular commodity. So let's go to our next market, silver. Now, silver is kind of interesting because it did move outside of the downtrend trade channel. Now, remember, sometimes when you move outside, let's just scope this in a little bit closer. Sometimes when you move outside of the downtrend trade channel, you frequently, like we did here, you come back in and move out on the downside. Now, we've moved out here, as you can see, and here, and we pull back. So here we are for the first time moving out. It looks like a breakout. The question is, where do we close? If we close below, let's say, below 28, or let's say the low end of 28, this is going to look like a little pop out like it was here, and we can see the market come back to test the midpoint, which is around 27.50 on the midpoint of the channel. So let's see how that plays out. But nonetheless, I think a lot of new buying came into this market today because it did move over, and I'm sure we had a, let's just scope this. I'm sure we had probably a weekly triangle on this, maybe not. Oh, hang on. No, we had a weekly triangle back here. So that was still going. I'm sure we had a daily triangle probably today. No, we had one of those a few days ago. So anyway, it's all like there. So it's a mixed metaphor there. You've got a monthly down, weekly up, sort of mixed bag. But generally speaking, it looks to me like we could potentially see this market pop down, but we'll have to pay closer attention to probably tomorrow. Let's see what happens there. Now, let's go to the companies I was talking about. 2 stocks we want to look at. That's Lowe's and Best Buy. This is Lowe's action today. They missed on their earnings, and of course a big drop today for them. And you can see basically our monthly trade triangle was already negative on this market. And you see again how we just topped out of the downtrend trade channel, and now we've pulled back to the midpoint. I think this market's going to be a little bit on the defensive, but nonetheless it's still in the sort of the lower end of its range in terms of trading range. But nonetheless, this was a signal. Take that off. This was a signal to be a little bit cautious because they did miss on the earnings, but nonetheless, the longer-term monthly trade triangle is still negative. So let's go to our next market. This is an interesting one. I want to look at Best Buy, which is down 7.7%. And you can see Best Buy monthly down, and there's the big drop today, which is down at 7.58%. Again, it shows you the importance of the monthly trade triangles in stocks and how they can be very deceptive. Here's a pop out of the downtrend trade channel right the way back down, vice versa, coming back up. Generally speaking, the Best Buy, I think the founder who owns 20% of the shares wants to take it private. They just hired a new CEO, and obviously the market didn't particularly like that. Consumer discretionary spending with Best Buy, and it doesn't look that good, and also they're getting killed with the internet sales. So let's go to our next market. The next market we're looking at is Coventry Healthcare. This is particularly interesting, and really what I want to show you, because Coventry Healthcare, see the monthly signal? This came on the 16th, which was a Thursday, August 16th. It was just Aetna just offered to buy all the shares for $5.7 billion. But someone knew this, and that's why they have to make their move. The triangles picked this up on Thursday. I mean, look at how tight this market was. Boom, all of a sudden, boom. So that was the monthly kick in, saying the market, something's going on. And look at the nice profit you had today. The market's up almost 20%, 19.17%. So you actually would have made that much money just in a matter of days. I mean, since Thursday, you can see right here, 34.66, 34.66, and we're trading at 41.66. Let's call it 66. So you've got $7 profit in that, and really a 20% return in just a matter of days and hours and so forth. Hey, this is Adam Hewison for MarketClub. It's good to be back, and we'll be covering more markets tomorrow. And just be careful. We've got some very interesting things going on, and I really think there'll be some great opportunities this year for the second half of the year. So let's stay focused and let's make some money together. So have a great trading day. I'll be back tomorrow, same time, same place.